GM everyone, welcome back to another Touchcast podcast. We're with Anand from Paradex. We are big fans of perp dexes. We've been having all kinds of projects on board, and Paradex is going to TGE soon, and we wanted to have Anand on and talk about the journey so far and what kind of new features they're launching and what people should know ahead of its TGE. Welcome to the show, Anand. How are you?
Good, guys. Thank you for having me.
Awesome. I've been following you guys and I've been using the platform for some time. But before that, I want to, because TG is kind of exciting time for community and everyone who's been participating, but it can be quite a bit of emotional as well for the team and the founders. So why don't you walk me through the journey so far with TG just around the corner? And I recently saw you mention about how it has been a little tough for you as well with what you've been through recently. So can you kind of walk us through, like, for the past couple of years, what's it been like?
Yes, definitely. Hi, I'm Anand. I started Paradex, but actually, for those that don't know, I also started this company called Paradigm in 2019. So I've been running Paradigm since then. Fast forward, I guess Paradigm today is a large institutional liquidity network. So, in layman's terms, what that means is think of it as an institutional options exchange. So if you're an institution and you're buying or selling large quantities of options, specifically BTC, ETH, etc., then we are the platform, the preferred platform. So most likely you will be trading on Paradigm. So Paradigm today does anything between 2 to 4 billion a day in volume every day. We have about 35% of Deribit market share. So by far, we are the largest platform. And actually, fun fact, before us, this market didn't exist. We sort of created this market. So that's why we are so dominant in it. We have about 95, 98% market share. So it's been like that for many years. And then, a few years ago, we decided that, like, hey, you know what? We, in addition to being an options exchange or institutional options exchange, we actually do want to build on chain and build an exchange such that we get, we also start offering perps, and we also, start building a product for retail. Because up until a couple of years ago, we were primarily an institutional focused exchange. That's kind of my background. That's the first company I built, and now we wanted to we knew that the world is moving on chain, and so we said, look, our thesis is the physical economy is going to move on chain. The technology for that is now getting mature. L1s and L2s are getting better and better, so they can do more things. So now, if you believe that the physical economy is moving on chain to becoming the internet economy, well, the first thing the internet economy needs is a financial center. And to me, or to us, the first incarnation of this financial center is actually the perp dex, right? So if you think about what a perp dex is, so a good comparison could be, let's say, in the physical economy, you think of a financial center like Wall Street, for example, right? You have banks, brokers, custodians, clearinghouses, and everything in between. But each of these entities are uniquely separate, right? Which is like, let's say, BlackRock and Fidelity, et cetera. They're all interacting with each other, but they're separate. But then in the internet economy, all of these functions are actually in one entity, which is the perp dex. So the TAM of this business is so insanely large because you have this seamless composability between functions, and you don't have this intermediation that you have to deal with in TradFi. So our thesis was, this is massive. This is a one in a century event. This doesn't happen often. We want to be one of 2 or 3 handful sort of like mega financial centers that will exist in this new world. And so that was the thesis around why we decided to build. That was kind of like the big picture thesis, right? But then, kind of like oddly enough, and as is the case when you kind of embark on an ambitious journey, there's always more than one reason why you do that, right? So in our case, this was the big picture reason. That was the primary motivation. But then along the way, once we decided to build, actually FTX happened. And FTX was a very, very disruptive event, not just for the industry, but it was really especially disruptive for us. The Paradigm business almost went under. FTX was our lead customer and investor. And then not only that, the majority of our top 10 clients went under. And so that, we were like, look, nobody should ever have to trust a centralized exchange again, right? And so then we had this, it gave us kind of like the fuel to say, okay, yes, this was the vision, but now we have we have exactly the reason why, right? So the last 2 years or so, 2.5 years or so, has just been executing towards this vision, right? And of course, the last 2 years have seen its own shares of up and down. And I like to say that not only we've ridden the downs as much as we've ridden the ups, and now we're about to TGE in the next week or so. So we're very happy, and but in some ways it's the end of a chapter, but in many ways it's the beginning of the new chapter, right? So we're excited about it.
Yeah. Anand, I do want to ask you, like, how different is it running like an institutional book versus something that's more retail heavy? Like, what sort of difference is there as a founder between both those businesses?
I mean, to be honest with you, it's been probably one of my greatest challenges is to kind of basically completely shift who I was to sort of like build a product in a completely new kind of realm, right? So we're in crypto, we're in trading, but it's night and day between building and running an institutional business and then building and running a retail business. But it's not just the difference between institutional and retail. There's also this additional difference in that Paradigm was a first mover. When we built this business didn't exist. We were literally the first people in the market to say, hey, institutions, if you want to trade big size, we're going to create a platform for you in an automated, seamless way, etc. And that birthed a new industry, basically, right? And of course, fast forward today, we have a majority market share in that. When you're a first mover, you don't have to convince anybody to get there. Like the moment you launch, you have PMF and it works, and people just come to you. So, when I first started the business, we were like 3 or 4 people for the first 3 or 4 years. It was nothing. People came to me. So I didn't have to, I got lucky, I like to say. In hindsight, I got lucky. At that time, I thought I was a genius. Today, looking back, I was like, man, I just got lucky with what I was first building. In retail, in this world, when not only is it a retail in a different space, but the fact that we are the 500th exchange in crypto. Now, if there's this much choice for the customer, how do you sort of differentiate and distinguish yourself in terms of value prop to the users? And we really had to fight. And compared to Paradigm, Paradex is like it's like building and launching a spaceship versus building and launching a Lego set, right? Like I don't want to trivialize the work that we did in Paradigm. It was a lot of work, and of course we were first to market, but we were lucky in many ways in the fact that we built this thing and we immediately found product market fit. I have to fight here every single day for relevance and mind share and volume and that market share, and that is very tough.
And I think one other difference is building in public when it comes to something like a perp text, where you have to be a lot of front facing, and probably when it comes to the institutional stuff, you don't need to be public that much. But when you're building something that is so native to the core users on crypto Twitter or other platforms, is that a shift you had to make as well?
Very, very. To me, like I said, this was probably I had to change who I was as a person. Right, like I've grown up as a trader. My background is trading, investing. I was a research guy. I did a bunch of things in TradFi on a trading desk, but it was mostly institutional facing. I faced corporates, treasurers, hedge funds, etc. I built Paradigm because that's what I knew, and of course, we got lucky. In this business, I knew nothing about building a retail business. So, and not just about retail, but like you said, it's building in public. And building in public it's just, you have to be, I'm introverted by nature. I was not ready. I mean, in Paradigm, I never needed to do that because I could have direct relationships with my customers, right? So once you have a direct line, you don't need to have a public persona, right? Because you have these direct relationships and it's manageable. Like I have 300-400 chats, but over time, you don't have to be talking to all these people all the time. You pivot to being a retail business and you have, I don't know, we have 70,000 users, right? There's no way I can talk to, all of them. So this building in public, having a public persona, I had to get over this thing. I was like, look, I have to be a public market CEO, and I need to be able to I need to be out there such that people have a relationship with me directly. Because in this world, I think, you have this sort of like founder-led company brand thing, and I knew I had to embrace that if I wanted my product to succeed. Because in retail land, if you're not doing that these days, people don't really have trust ultimately is trust with people, right? And so if people see me, they know who I am, they see my public persona, they can develop that relationship with you. So that was 100%. That was probably one of the hardest thing I did. The one additional thing I think, which I think you guys will find interesting, is that The other distinction, which is not much talked about, is that retail is very field driven, right? Institutions are very rational from a cost, capital efficiency, etc. If you launch a product and a feature, it's very much about, it's a rational analysis of like, okay, what does this cost me in terms of time, investment, fees, etc. When you move to retail, it's you're almost 90, 95% talking, dealing with the feel. And so building a product where you're selling to feel versus selling to reason and objectivity, again, it requires, very like a change in your core mechanism of how you think about building. And so that's what I mentioned when I said I had to change who I was as a person and just say that, look, I know nothing. Let me start from scratch.
100%. I mean, that's some good advice for founders right there. You mentioned feel retail driven. I think one of the things we always mention in the pod is we used to have these tribal groups for L1s where I'm just neat guy, I'm just a Solana guy, and I was just an Avalanche or something. I think right now we're seeing that same thing for Dexes where
Mhm.
I belong in this group and anything outside that I won't accept kind of thing. Even as I said, there might be better reasons to make the shift, but they just want to stick in their own group. Uh, I think as we got in this topic, I wanted to ask something going to be a later question, but as these communities are forming and you're trying to bootstrap your own as you launch, how do you deal with this whole, the comparisons never stop because there are so
Mhm.
many options out there. How do you deal with that? Because as you said, they're not going to just fall for a reason, and there's something more to that than.
Look, I think at its core is that, like, look, tribalism is a key part of who we are as human beings. There's no escaping it, right? And a lot of the times tribalism happens even without you making the choice to be in a tribe. You, for example, the country you were born in, the race that you have, the college that you went to, the profession. Sometimes, as Indian, kids, we were kind of pushed towards something, whether we like it or not. This is kind of an inevitable part of who we are. So you either spend your time kind of fighting it, or you spend the time to kind of, accept it, embrace it, and then try to learn about building a tribe and what attracts people to your tribe, right? And that's what we've done, is rather than trying to kind of, cater to people to say, oh, look, we're X and Y and we're this and we're that, we're like, no, we're just ourselves, right? If you look at what we've done with the Money Badgers, if you look at what we've done in terms of our brand, what I say, our people, our core values, we have consistently chosen the path that we think makes sense, not what the market wants from us and not what VCs think on Twitter. It's about what we think makes the most sense. Because long term, we think this is the way to attract true community. And I think the key word here is attract. Is we're not trying to go out there and say, hey, come to us. We're preaching to you to come to us. We're just being ourselves. And we're saying, this is what we think is going to be the future. We're about to head in this direction. If you want to come along for the ride, here are our values, here's our product vision, etc. Come along, right? Long term, I think this is the way to grow and scale the community. And over time, if you're doing the things right, over time, you will attract like-minded people with like-minded values, and then they all coalesce around then it becomes our vision, not just my or our vision internally, but like the community's vision. And I think that's the secret, right? It's like at least that's what I think has been our mechanism, and we're going to keep doing that. If you worry too much about what other people do, one, I think it's a waste of energy, and two, it's, I think, you can't really control it. So it's like a waste of your time, right? Because like you can't control this tribalism. It's inevitable, right? People are going to do this no matter what. So why bother about it? Just focus on
Yeah.
doing your thing.
I think one other thing is that's how you attract permanent capital as well. Like, I mean, just to kind of give an example, like some of the first early dexes, the people who have been using and forming a community, they're still using those same dexes
Mhm.
and they haven't shifted. But the people who like the early group you attract, that kind of permanent capital and that base keeps growing as long as you said, just be yourself.
Yeah.
Yeah, I think one thing that I thought, Caladora from Ostium said that was hilarious. She said that even though there's tribalism and you see all these bulls on Twitter talk about their primary perp decks, they still use our perp decks, and this is something that we monitor on the back end. So tribalism may be a front in terms of people
Oh yeah, it's
share on crypto Twitter, but like what people use comes back to like core values of the perp decks.
correct.
I think, and this sort of segues perfectly into like what is the competitive landscape in your opinion? Like when you go out there and talk about Paradex's core values, like what are these core values? What differentiates Paradex from like the rest?
Look, the foundational kind of like line for why you should trade here is we are a zero fee perp dex with privacy, right? That's core to our sort of value prop, which is, and in that statement is the value prop itself. Zero fee perp dex. It means you don't pay fees here, and number two, your trades are private. You cannot get liquidation hunted. So again, both value adding words, very meaningful words, useful words to people such that they understand exactly why I should trade here, right? But it's not just a perps tax, right? It's not a zero fee perp tax. This is not only applicable to perps. This zero fee model with privacy, it scales to spot perps options, and we have other things such as unified margin, for example, such that you have max capital efficiency. We are one of the few dexes that don't have ADL. This is a quite a big difference because every other perp dex and centralized exchange has ADL on 1010s. ADL has failed spectacularly everywhere. We were the ones that came out and said, look, this is a stupid model. And we didn't choose no ADL on 1010. We chose it 2 years ago, so, right? Because if we didn't have it, we would not be able to build a perp dex, right? Because you can't have a perp dex without some kind of like loss mitigation mechanism when you have bad debt. So again, I think it was on that 1010, our model really kind of like shone, or like it was shining, because people could see that like, oh, these guys actually doing things different, and we had no losses, etc. But again, no ADL is very core to sort of like our risk management mechanism. But high level, we are a zero fee model with privacy and unified margin that extends to all asset classes, spot perps options. And then we also have these really great risk management features, which are especially relevant for institutions, such as no ADL, because a lot of the times ADL, when you're trading on one platform, you're trading another platform, and you get ADL'd on one, and let's say you were sleeping, and now you're like exposed, right? Because you have this cross-platform hedge exposure, and then one leg is closed out. That means you're exposed on the other leg. We think this is really, really bad, right? And the core of it is because ADL is trying to do two things using a single queue mechanism. We separate those queues into two separate queues that perform these mechanisms, and we think that's the better approach. So anyways, going back to it, that is kind of succinctly, why we think we are different than everyone else, and we're going to just keep hammering down this path.
I mean, I think there are many features and some of the primitives you're offering, but kind of doubling down on the ADL stuff, because it's always kind of been a topic for the past 3 or 4 months. We've seen this happen on Hyperliquid on 1010, even though they claim that ADL happened at favorable price and whatnot. And recently, we have seen a lighter regarding equities. I think it was Korean equities or Asian some equities that when people got ADL. How do you mitigate that? Like, how does that work where uh, you don't need to ADL and the active positions are still on? How does that work?
Right. So ADL at its core, it stands for auto deleveraging, right? Auto deleveraging is effectively, it's performing two functions. One is a solvency function, and the other is a liquidity function. Now, what do I mean by that, right? So, think of a scenario where, let's say you're trading, you're a highly leveraged trader, you have 100 million position, and you basically get liquidated, right? The price goes below your maintenance margin, the exchange sort of like takes it over, and now the insurance fund basically it has this 100 million of exposure, right? And if let's say the price continues to move against the person that takes it over, so it moved against you, you got liquidated, but now I take over that debt as the insurance fund, and now the price keeps moving against the insurance fund, such that the price moves in such a way such that there's not enough collateral left against the position, right? So now the insurance fund has a position whose negative value exceeds the amount of collateral that I took down from you. So that difference of that basically excess, or that shortfall between what the negative market is worth and how much collateral I have, is called bad debt. right? So now the exchange has basically bad debt, or it has excess debt, excess over the collateral that it has, right? Now the exchange isn't, that's a problem, because the exchange has this like negative market position and this bad debt. Like, how does it get it out, right? Because it's like somebody's got to pay for it, right? The value's got to come from somewhere. So what ADL does in that case is it basically says, it's like, okay, hey, look, the exchange has this position and it has this loss because it's a negative position and it's a position that's open. So that's what I mean. There's a loss, which is a solvency question, and then there's a position, which is a liquidity question. So what ADL does as a queue is it goes and it does this ranking and it says, okay, let me find all the most profitable traders that have the highest leverage, and then let me basically like take over their position, close their positions out against the insurance fund, and claw back some of their profits to basically make my loss as the insurance fund go back to zero, right? And at the same time, I get to close the position. So I close the position out against somebody's profitable position, and I get the loss back from those same people, right? Now, that's fucking terrible because, like, let's say you were long and or short, and you have 100 million P&L position, and or you have some cross venue arbitrage that you have 100 million here, 100 million here, and maybe you have a loss on the other side, right? Maybe you have 100 million profit here and you have lost 100 million loss on the other exchange, and now you get ADL, and not only that, your profits are taken away from you. What the fuck? Like, you're like, shit, that's bad, right? Because now I'm unhedged, plus you took away some of my profits. And the lack of predictability, I think, is the worst, right? Because the P&L going away from you, I think that's inevitable because the exchange has to come up with the money from somewhere. So the traders, it goes to the profitable traders. So you cannot get rid of that problem. But the lack of predictability in which it happens is the bad part, right? So now, again, I said there's two functions it performs through a single queue, which is one queue, we have some ranking. Now, here's the source of the problem. Because it's trying to do two things, in that equation, it's trying to do two things using a single queue, it kind of creates this kind of like non-closed formness of the equation, which means it's like there's a chance that you will never get to a proper solution. It's like this infinite thing that just works and you will never get to a solution. There's no guarantee that I can actually find a list of users that are both profitable and high leverage and not liquidate any other position that user might have. So it's a complicated thing that's kind of happening real time. So what we did is we said, look, this is dumb. It doesn't work. It creates lack of predictability for traders. And for like complex assets such as options, ADL cannot work fundamentally because options runs on portfolio margin. ADL operates on the assumption that you have positions, you can stack rank positions. It's like it only works at a position level, not at a portfolio level. You cannot do that for options. So we're like, okay, this clearly doesn't work. We definitely want to we're the options guys. We're going to be adding options. So we have to build a mechanism that's better. So what we did is we separated these queues out into a solvency queue, which is called socialized loss. And then there's another queue called last resort liquidity. And the end result of this is that, yes, we definitely get the solvency back. So we're not, and we have to claw that back from traders. But traders get a choice, which is if so basically socialized loss is turned on, you see that, okay, hey, when I withdraw my funds, I will take a 1% loss on my collateral, right? But the choice is yours. You don't have to crystallize your loss kind of without your choice. You make the choice to withdraw whenever you want. And then the second is, let's say, for example, the exchange cannot get out of the position, cannot trade out of the position. Then what it does is it communicates to users that, hey, in 48 hours, these positions will be shut down. So it gives you predictability, right? So this is how we think is kind of like the better approach. And actually, I'm pretty sure you need another 1010 for people to realize that 1010 is that ADL is super stupid, and you will start to see people kind of move to this model. So sorry, a little bit long and technical explanation, but I thought it's worth.
Yeah, definitely needed. Maybe one final to kind of wrap that up. You said that you kind of indicate to the users to manage the positions and stuff. During that time, what happens to the exchange book? Like, does it just keep running on losses, or how do you manage?
So the loss, that's exactly right. Which is the exchange has a loss that is on, which means you see socialized losses being on, and every time you withdraw, then you get basically your withdrawal gets capped by that percentage, and that percentage is applied basically. You can apply it different ways. You don't have to apply it uniform to everyone and make it unfair. For example, we have a mechanism where we don't apply that loss to guys that don't trade, right? So if you just have collateral on the platform, That's not risk-taking activity. So why should you get penalized for it, right? So again, there's a way to do that, but and you can slice and dice it different ways. But yes, during this time, the exchange has this socialized loss function, and only when you withdraw does your kind of like haircut get crystallized.
Awesome. Yeah, I really hope that I don't know if it'll ever happen, but it would be nice for all the dexes and like how all the chains are trying, like, with the quantum resistance stuff, everyone is trying, we should have reach the same standards. I don't know if we get to the point where dexes follow the same standards for some of these critical functions. But yeah, let's move on. But zero fee markets, no ADL. The other primitive that is unique to Paradex is privacy. You guys are building on CairoVM and on EVM that kind of powers this. Can you kind of talk about why privacy was such an important thing for you guys? Even though it's a big theme, everyone's talking about it, we don't see so many people actually implementing it. Why was it so important for you guys?
So look, the three foundational values for the exchange were liquidity, privacy, and capital efficiency, which is unified margin, right? Liquidity, our innovation here was RPI, which allows us to basically provide better prices than a centralized exchange, better than CEX liquidity, what you see here. You have privacy, which I'll talk about in a second, and then the last piece is unified margin, which is you have this capital efficiency such that when you put your dollar here, it's the most efficient return on your capital anywhere else, because we have L1, L2 return, et cetera, right? So I talked about first and third. The second piece is privacy. Privacy is important because privacy is a cost to traders, right? What I mean by that is, let's say you are trading, let's say on these public dexes where you can see people's position, or people get liquidation hunted, for example. By virtue of me disclosing my position to someone, it creates a potential adverse scenario for me, right? So if I transmit hey, I'm long or short this amount of X position at this level, people can use that information against me to trade, right? And ultimately, if they use it against me, that means that's a cost to me in some form. So if we're building a marketplace, we have to build a marketplace such that the costs of transacting in that marketplace are zero. And I don't just mean spread, depth, uptime. I also mean costs like privacy, right? So privacy is ultimately a cost that needs to be factored in to the total cost analysis that users have to perform when they trade. And so that's why it is foundational to our vision that without privacy, we cannot assume that we are the least cost marketplace in the world, because if we make those costs basically zero or very near zero, then that means the volume of activity is a very simple idea, right? When the cost of something goes down, you see a higher volume, whether that's API calls, whether that's transactions, etc. It's a direct relationship between the cost of something going down and the volume in that going up. So that was the thesis around why privacy was so important. And of course, that was why. Then the how is, we realized that the only way for us to do this at scale was to have a ZK stack. And that's where CairoVM came in. We forked public Starkware, which is a public chain, and we run it as our own chain. Basically, we call it the Dime chain or Dime VM. And again, why? Because it allowed, one of the reasons was privacy. There's other reasons why too, because ZK also allows you basically infinite scale. And so scalability was one, privacy was the other. These are the primary reasons why we chose a ZK VM.
Yeah, I think the epitome of the privacy sort of conversation is like James Wynn taking $1 billion long on Bitcoin and then kind of mess with his positions. Anand, is there also, since you forked Starknet, is there a relationship with the Starknet team, or is this completely separate? Do you get support from them? And how has it been building like a Cairo VM in itself?
No, yeah, so we work quite closely with them in the sense that all major releases for Starknet, we also get, and we can elect to basically take them or not. But over time, you will see us getting more and more custom in terms of why, because our application is a high throughput, low latency perp dex. So that means we have to not just basically be able to tweak the chain logic in order for us to achieve our goals. So over time, you will see us look very different than the main chain, but the foundational stack, when we started, we definitely started the same place. And yes, we work very closely with them on new releases. if there's features, we work very closely with them in terms of collaboration. It's like for privacy, for example, we worked very closely with them to implement privacy. Nothing but amazing things to say with the team. The team is very, very gifted technically, and they're one of our, obviously, our closest partners. And of course, we built this, with their help. But over time, like I said, we will start to look quite different in terms of our focus, customization, et cetera, et cetera.
Awesome. I'm really bullish on equity perps, and as more and more indexes roll out their own kind of their listings and stuff. I mean, I don't know, when the whole silver blow off top was happening, and Hyperliquid was doing 3 or 4% of global volume. I thought that was super cool. For Paradex, what is your rollout plan for some of these different equities, commodities? Some people are even saying treasuries are coming on chain. Yeah, for these whole other asset class that, let's say, someone in India probably doesn't have access to. What is your plan there?
So we want to list everything, right? So just this out there. So instrument-wise, we have spot perps options, but asset-wise, markets-wise, we have crypto right now. In the next couple of weeks, you will see RWAs, so gold. So we already have PAXG, but I'm talking about XEG, XAU, like direct, not tokenized representation of gold, like the actual index itself. So you'll see gold, you will see FX, you will see equities perps, and then indexes and indices basically after, right? So we definitely want to launch perps on everything. This has always been part of the vision, precisely because of what you said, which is we know that there's one part of the world that has access to these tools and access to these platforms and markets, but the rest of the world largely doesn't have access to this investable kind of universe that we can make available through kind of perps and leverage products, right? And so probably in the next 30 to 45 days, you should actually see us roll out pretty much everything you see in terms of FX, commodities, and equities and indices. And then after that, we will basically launch dated options. And then once we launch dated options, we will also launch dated options on everything. So spot perps, FX, commodities, gold, etc. So the vision is very much to rapid fire head in that direction.
Awesome. I mean, as you mentioned, options. I've always been curious to learn about options, but I always felt like this is too complicated for me. With perps, if I'm directionally right, and I mean, it's the same with options as well, but if I understand the directionality of whatever I'm trading, it's good enough for me. I don't need to figure out all this,
I think that's also like
is
that's a great question for Anand as well. As someone who's built like a deep book in the options world and someone who's building in the perps world, why is it that crypto perps have all of this adoption and options probably isn't getting there right now?
So look, my thesis is quite simple, but I think it's been the reason. But I haven't heard many people speak about it, at least in this way, which is that perps ultimately are a futures contract, right? It's just a perpetual future. When you're trading perps, you're basically trading leverage spot, right? And the cost of that leverage is the funding rate, right? Very simple. And for BTC, you're paying 1 bip every, 8 hours, something like that, right? So about 10, 11% a year. When you trade options also have leverage, but they have this additional property, which is insurance or convexity, right? Basically, it's this like asymmetric payoff. So, and the cost of that option, therefore, is reflective of both leverage, the cost of leverage, plus the cost of this insurance. So far, options have been, the cost of leverage component is the same as the perp. It literally has to be the same, right? Because the law of one price, no arbitrage principles demand that both cost of both leverage basically needs to be the same. But the insurance piece, this extra piece that options has, that is tied directly to the volatility of the underlying. In BTC's case, the volatility has been very high. It's been in 3-4 years ago, it was 150 to 100. Lately it's basically in the 30 to 50 range. Now, 30 is kind of low, probably about 40 to 50 range. 40 to 50 range is still high from so the difference would be, for example, if I'm trading perps, I will be paying 10% a year for leverage. But if I'm trading options, I will be paying 100% a year for leverage plus insurance. Now, as a retail investor, if I come to you and I say, hey, you have this choice. You want to trade perps for 10% a year, or you want to pay options with 100% a year? And so you will say, fuck it, I'll just go YOLO because it's so cheap, right? At some point, insurance is, if it's too expensive, even though you know you need it, you're like, nah, it's too expensive. Like it's out of my budget, right? So my thesis is that's part of the reason why. The other reason, like you're right, is harder to trade options, etc. But it's not the main reason. I think this cost reason is a very real one. And as the volatility of Bitcoin and crypto in general goes down, then this, like, it starts to become equal. Let's say we get to a world where perps leverage is 10% a year, options leverage plus insurance is 20% a year, 30% a year, and the vol of crypto starts to become closer to the equities, let's say S&P vol. Then options start to become very, very interesting. And that thing, I think, is when that's what I think will happen in the next, let's say, year or so. And we want to, remain positioned for that.
And I think they make they make perfect sense in these conditions where you're pretty uncertain of what's going to happen a couple weeks from now, a month from now, but you're certain that in 6 months or a year we will trend in a direction that I am bullish on, right? Like, for example, if I'm bullish on Bitcoin right now, but I can't put on a position with perps and pay all this funding, and
Yeah.
but with options, if I'm just directly correct, payoff is going to be good. I think it makes sense in certain conditions, and perps overall are like a much simpler instrument. Another thing is, Anand, you have, you're launching equity perps, Coinbase is launching equity perps, 24/7 trading, TradFi institutions are doing the same. Robinhood is coming out with its own stuff, what they're going to do on their L2 and stuff. As this whole, kind of pie is growing, what do you see like the perps landscape, I don't know, maybe a year from now? And how do you see kind of Paradex playing a role in that, where you not only have the native people, but you have all these institutions coming and doing their business on chain?
Look, I think kind of like, let's say 2-3 years from now, let's say 5 years from now, I think there'll be broadly 3 categories, maybe 2 categories, but for argument's sake, I think there'll be 3 categories. One is this category of kind of like CEXs that kind of evolve into whatever kind of like the centralized exchanges today are basically moving to the direction of becoming regulated, right? We're seeing Binance, etc., trying to be regulated in X or Y jurisdiction. The second category is also kind of centralized, but I put them in kind of like the Web 2 incumbents that are now trying to make inroads into crypto. I'm talking about the Robinhoods, the Revoluts of the world, right? Because they have such powerful distribution, and they want to basically offer this space, this basically this suite of crypto products to their users, right? And then there's the third piece, which is the DEX landscape, right? Now, there's 2 principal differences. One is, of course, the permissionlessness of the DEX landscape makes it easier for people to join. And of course, DEXs in general tend to always be the ones that are innovating. They're offering something new, whether it's equities perps, whether it's privacy, whether it's zero fees, like something new. Why? Because we have to compete with the incumbents, right, in some way. So you will, I think the DEXs will continue to sort of like lead the charge in pushing the industry forward, because they're on the cutting edge of innovation, right? So they will keep moving the space forward. And so users at that point will have this really nice choice. It's like, okay, do I stick with my existing distribution, pay fees, get comfortable, or do I basically go in something new? And of course, the airdrops and things like that are also pretty valuable, right? So there's this additional incentive. So I think you will sort of see this kind of continuum you will see perpetuate over the next, like, say, 3 to 5 years. But there will be a very clear set of winners in each category, where I think like the top 3 DEXs will probably have 80% market share. The same way like Binance, Bybit, OKX have, I don't know, 80% market share, right? You will start to see that in this world as well, right? That is just solely from a transaction side, like a transaction perspective, which is just from a trading transaction perspective. How do I see this landscape evolving, right? When I say trading, I mean trade, earn, invest, kind of like all, right? The added advantage that perps have is that you have this enablement of ecosystems to be built around them, which if you have a chain like us or Hyperliquid or whoever, we are able to now not just offer a product, but we can now offer a series of very complementary sort of apps that are composed directly with your balance that sits on chain. That ultimately, I think, is something that centralized players cannot compete on because they're centralized. They don't have this smart contract based open architecture, and that's why you're seeing Robinhood, et cetera, trying to get into that game of building Robinhood chain, et cetera. So I think if DEXs stay on this thing of knowing exactly what their value prop is, right? The innovation, the privacy, all of these things, but then also the fact that you can offer something more in this ecosystem, I think we will be able to, attract and basically suck all the capital, the builder mind share, the capital from, and such that this becomes the new world, right? Because I mean, to be honest, like I'm really excited about that because to me, that is us rebuilding financial rails. If we go to a world where we allow Robinhood and everyone else to just kind of like tack on their shiny thing on something that's blockchain and sell that, then I think we've lost, right? As builders in this space. Like I want it to be such that we are literally offering brand new rails for you to trade, for builders, users, everyone, economies, governments to sort of like build on. I think that to me is most exciting. It's hard, but that's exciting.
100%. I think we are at time. Thank you so much, Anand. This was awesome, and we're super excited for TGE. Best of luck, and maybe we can do a follow up after the TGE, and once you
Would
have
love
some
to.
markets roll out.
Love to, man. Happy to. Thanks again for getting me on.
Awesome. Thanks, Anand.
Take care. Bye.